All right, welcome to the Hurley Investments Market View commentary for March the 4th to Monday evening, 2019. Just as a heads up, I will be traveling on Thursday, so there will be no trade adjustments. I will do the best I can to do a trade findings and adjustments in a pre-recorded, but I cannot guarantee it just yet. With that said, interesting thing I want to talk about today are crashes, dips, spikes, and recessions. And the reason why is because, and I should ask you guys, how are you all feeling about our market today? It's a tease. That's kind of an interesting one. Way to put it, Lance. Ambivalent for Bill. It jerks you around. That's interesting. I think it wants to go down, but some unknown hand is keeping it levitated. Way to go. Well, I feel the best way to describe it for me, it's toppy. This is how a market reacts when we run out of buyers. It's toppy. The real instigator or the real next push higher wasn't earnings and must be a China deal, which for all intents and purposes is a couple of months away. I'll be honest with you, we did have a 20% drop in the S&P 500, but it wasn't a normal bear market correction. And what I mean with that on how quickly we fell was kind of normal, but how quickly we came back was not. It was probably a rebalancing. A rebalancing in December, and obviously came back pretty quickly. So not our normal correction. Up into this, or bear market, a bear market. A bear market is what we call a crash. And our bear market crash, in all honesty, is the crashes happen every 4.2 years. We're overdue. We're quite overdue, in all honesty. And I'm a little surprised at our rebound. It wasn't normal. It's not a normal bear market crash. In fact, I think our next true crash will probably be a 40% drop. 40% drop will affect asset allocation models pretty much to the point where if you're in a 40-60 asset allocation model, you will lose about 66%. Why would I think it'd be a 40% drop? Because a lot of the profits that seem to have been made along the way of our recovery were not organic. It was stimulus profits. And because of that being a stimulus profit, I don't see the type of, I see the drop equating or equaling the gains that we had with those stimulated effects. Now, someone did say buybacks, and yes, we are at a significantly higher buyback, which also tells me that we didn't have that organic growth. So, as I talked about the trade findings and and what did I call it? Trade findings and adjustments. Last week, I spoke of the ITM in the money. If I was going to be a trader, which I'm really not, I would want a nice cushion on my trades, which equals an in the money. If you remember, I brought up Boeing, and you could have done good on Boeing. You could have done good on Caterpillar. You could have done good on Apple. You might not have done so well on NVIDIA yet. But I chose a Boeing where I was using the 400 and 405 bull call when the stock was trading at 426.67. I had $21.67 till my stock hit its break-even point. If I was to calculate that, of course, I need to get my phone to do that. I don't remember what it was offhand, but Boeing could have a drop of let's see, 2167 divided by 426.67. It could have had a drop of 5.0%. A 5% drop before I would lose any money. And pretty interesting because we put it on, it ran up $9. The most you could make was $8.50, and I'm pretty sure in one single day it was a $364 profit. Not a bad run, because if I took that 364, right, on $5 of risk on my net debit, though, maximum loss 41. So 364 divided by 4150. It's an 8.77% return. 8.77% return. And if I annualize it, it's like 3,201% return in a day. Sorry. I love it. I love doing that garbage. Not a bad trade. And some of you might be saying, hey, Kevin, you know, you don't do a bunch of these for me. And no, I don't. In all honesty, I kind of segregate everything out into an individual account. For me, it's my smaller little personal account. With that said, just a comment on a day like today, so you see what I'm doing and why I'm doing it. We have a S&P 500 down 0.39. I really want to use the 0.79 for the Dow, but you're not compared to the Dow. You're compared to the S&P 500. And I was down $1,399 divided by 66.34,704. I was down 0.0002%. So I'm pretty comfortable. Beat the market on a day like today, and it's a good day in the market. Now, with all that said, if I look at my performance, Facebook was up, Apple was up, Disney was up. On the flip side, Visa was down and Under Armour was down. Those are my two big ones that give me a little bit of worry. Visa, looking at a chart, I made some changes. I think I told you, and I might not have, but I thought I told you that on Visa, had to be on Friday. Pretty sure it was on Friday, so I hadn't told you. For those that own shares of Visa, I moved up my protection to 150. Visa was trading at trading at 149 something. Moved it up. I have a bear put on Visa, a 150, 140, trying to get down around that 50-day simple moving average, that 200-day simple moving average, which sits at 138.26 or 138.55. Visa has a hard time getting over 150. There are a bunch of orders stacked there, partially because they did a 4-for-1 split and split down to $75. When they went down to $75, 4-for-1 to double your money up at 150. A lot of mutual funds have to take their profits or take some profits, so there's a crap load of orders stacked up at 150 to sell Visa. I also had some leap long calls that I sold out of Visa. There are a bunch of people that were at the 125, 135, 140, 150. I think the 150s got sold out today. We all took a nice profit. And I will add those leap long calls probably a little bit farther out in time, but probably down around a 140. I'll start to add half of those back in for everyone. That way we can play Visa. I still have some people that we just started on Visa that if they haven't had a profit yet on Visa, I'm not into the leap long calls just yet for them, but I will be once we take a profit on their shares of Visa. I like playing with the house's money. And because of past experience, good timing on Friday to put some bear puts on Visa and get ready to run them through a typical or a somewhat typical chart pattern. Under Armour makes me worry. Under Armour should be heading back up to 25. Hit 23, came all the way back down. The good news is it is still holding to 22.27. I thought it was up after hours. Let's take a quick check. After hours, up 6 pennies, back up to 22.33. So I still do have my $20.50 to $22 bull put. I tried to get out on Friday at 21 cents, missed it. Tried to get out today at 30 cents, missed it. Sucker's worth like 37 or 38 cents, so I still have a profit, but I am looking to get out of my bull put and get it back on when it drops down around $20.92. And once again, I will probably put it in the money at a 20.50, 22, where I'll take a ginormous credit down around $20 or $21 and run it from there. The reason why I'm trying to show you this is your protection was going in the money, giving yourself a buffer for that stock to move so that as you're placing your order, you had an opportunity to have it bump around just a little bit. I'm pretty sure I got filled at 384, even better than what we showed you right here. Maybe it's 394, Might have been 9 cents higher, but it was a good trade. I didn't have the snapshot to take it off yet, but it was a pretty decent trade on Boeing. So when you're uncertain about the markets, honestly, my word of advice, give yourself some room. Let it run. Let it come down and still be able to be in the trade. Let it come down to the point where if you're going to get a crossover, you can obviously see that maybe you guessed wrong, and you'll have space or time to rearrange your spread and or add protection onto it. Pretty simple concept. Go in the money, give yourself a buffer, especially when you have an uncertain market that doesn't seem to follow the trend. With that said, I know with the Safe Option Strategies group, they had some leap or some longer term long calls on the SPYs and the diamonds that for all intents and purposes, they got their butts handed to them on it. But Jeffrey went out and he bought more time. I love that idea. We're a China deal away from a big bounce up. They would recoup what they've lost already, some of their new risks they put into it, all the way out to April. Good idea. Buying yourself some more time for some good news to come across, and obviously exiting that trade on some type of China news that looks to be wrapped up, in all honesty, by the end of March. So with that said, if you ask me where we're going to end this week, I'm going to say down. I'm going to say down because of what we went through today. I'm also going to say down because my worry is what is going to be our next market crash, and how long will the recovery be, since we, for all intents and purposes, we do not have this recovery in place. In fact, I can give you guys a handout. Let me take a quick peek here, and let's see if I can't get this for you so you can download it if you wanted it. Where is it? Crying out loud. This PC downloads. You think I would have done a better job of finding it? This PC. Well, it looks like I'm going to email it to those that are here. I will send it on attachment. Kind of a bummer that I can't figure out how to get what I need to install. I don't need to install anything. I just need to find. What a bummer. So I won't find it, but I will email this to those that are here today. Put it on the website for download so you can see some of my worries on this is the Dow. I also have another one that's related to the S&P 500. So I'll get both of those out there for you. All right, with that said, we're no longer a bit overbought. We've come off of it, but we are still technically bullish. Rapidly changing, awfully close to crossing over on our MACD. The S&P 500, we are no longer almost overbought. We are still bullish, and we are not quite crossing over yet on our S&P 500. Although we will probably go down and bounce off of the 200. That's an interesting bounce there. Interesting to see how that moves forward. And obviously the NASDAQ is already bouncing off of the 200, and it's done so twice now. I'm still going at the 0% end of March. I'm really looking to change that. I'm really looking to see us relatively flat through March because of the games we already had until we get a China deal, and then we'll take off. I don't think we'll be up more than 2% for March. Earnings, C-Trip, and CRM, which is Salesforce. We're starting our retail sales with Kohlers, Target, Ross Stores, Urban Outfitters. VSLR is Vivint Solar, Abercrombie and Fitch, BJ, Dollar Tree, Buckle, Burlington, Kroger, Costco, Marvel, Big Lots, Vail Mountain Resorts on Friday. Not much really happening, and it looks like I didn't finish there. Unemployment, hourly earnings, non-farm payroll, average work week. We have on Friday our typical average work week, but we also have housing starts and building permits are the ones that I think we're missing there. That were a little bit delayed. Internationally, China's inflation numbers on Friday. If you ask me how I'm looking to trade, in all honesty, I am in a lot of stock positions right now. I'm in just stock positions, and then I guess about half I have some bear puts in place. I'm pretty, boy, it says I can drag and drop. Hold on one second. I want to see if I can find my downloads. So I can drag and drop the handout so you can have it yourself. Geez, come on, Hurley. Kind of bothers me that I don't have this. Can you tell? Can you tell? Can you tell? Can you tell? I wonder if the layout would look better as a landscape. Definitely, we're going to save it. And we're going to save it in my documents. We're going to save it in documents. We're going to save it in downloads. And now I'll have it as a handout for you. If I can just refresh it, and here we go. And there you go. If you go to your handouts, you should be able to get that corrections little PDF here. All right, as I'm going on to bigger and better stuff. Maud just asked an interesting question, and Lance has one right behind it. If the market feels toppy, wouldn't you want protection on all your stocks? So the short answer is yes and no. It does feel toppy, but we do have a China deal that could send us much higher. So I am playing the odds here that we will probably go sideways, before we go down. There are some stocks like Disney up on a day like today, trying to get back to that 115. Apple is up on a day like today. Could I be safer if I had us protected? Yes, and I'm close to it, but the problem is I'm protecting us up to the next earnings, which will probably be more sideways than down. Isn't all China news already baked in? Where it'd be a sell the news event? Probably not, because we had our big 20% drop and we haven't hit those highs. So to go back and retest those highs, even though we're close, even though this will fix a global or a macro expansion event, probably not all the way baked in. And Lance, you made the question, how important is China? I honestly think China is the reason why we haven't hit new highs like we did last year every couple of days, every 3 to 4 days, is because China is not baked in. But that I do like your thinking. I think those are good thinking. I think it's pretty interesting. I have a little bit here on the history of every bear market. And I've got some interesting information here just for you guys to go through. Some interesting charts, some interesting seeing how long it went. This one does not include the most recent one. It's 2002. So it goes to the 2008 crash, started in 2007, obviously. I'm going to answer that in a second. I got an interesting article on faster speeds, the 5G and faster speeds. I have an interesting article here on solid evidence that shows investors can still make money in this market even without a China deal. And Maud, that's where I might go back to you. It doesn't mean all companies haven't had organic growth. What I mean by that, and I threw this one in here because it's already here. I've given this one, I might have shown this one before, but I do have the U.S. can solve its trade problems while launching the world economy, or relaunching the world economy, and it just talks about the core strength. But more importantly, I've got some stocks that I really like a Disney, like a Bank of America that haven't reached their highs and have been held down for ridiculous reasons last year. Apple would be a good one. Visa would be a good one as it goes through its normal growth period. When you go through recessions, you also run into some recessionary proof stocks, like some energies, like some, I want to call them MasterCard, but they're with some financial lending type companies. So there are some that will have organic growth in a recessionary type of environment. And for those reasons, I have certain positions the way that I do. And for those reasons, I have certain positions protected the way I do. In all honesty, I will probably, most likely, get some protection on Disney again. I would be looking at long puts on Disney closer to 115 again. Apple closer to 178-ish. Under Armour just in a range. No reason why Under Armour looking to protect closer to 25. Ford looking to protect closer to 9, and we are relatively close there. Probably 9.25. Just different ways that I'm looking at it based on past areas that it just seems to work around. So that's the why behind my madness. If you guys go to your handouts, you should be able to download the history of market corrections. Go up to view, go to handouts, and you should be able to download that history of market corrections and get that PDF off of us. Good questions. Any other questions? Anderson's cancel effect LVS. Have you read any? It's been a while since I've been in Las Vegas Sands. I haven't understood, in my opinion, how well recessions will affect discretionary capital that people will spend betting. So I would not be in some of those positions only because of the macro events and macro economy. I know Las Vegas Sands has had a pretty good bounce. We'll see how good they have had it. Las Vegas Sands. Not bad, but I would tell you right now it's probably going down to 57, if not 55, before you'd see it head back up to the 60s, and obviously can't get above the 200-day. Play it bearish. Play it bearish, but I'll be honest with you, it's one I've never quite understood. Their earnings are, in my opinion, directly related to discretionary capital that people will gamble. I think in a more recessionary environment or a stagnant type of economy with both the U.S. and China right now, I'm not sure that I think there are probably better opportunities elsewhere, but I'm also saying that because I do not know Las Vegas Sands as well as I should. Ida, General Electric worries me. I would not be investing in General Electric. I would not expect a rebound. I think they will be sold off into bits and pieces, and General Electric, as we know it, will be out of business. I think the turbine part of their business is the only profitable portion of it. And right now, I don't see a way out for General Electric to come anywhere close to $12. If anything, I think it's more of a falling knife right now. But I also only skim headlines on General Electric. It's been a long time, probably 8 years since I've been in General Electric. Their dividend is probably not stable. Their fundamentals are not stable for that company. So it's not one that I'd be looking at as an investment. Are there any other questions you guys have? Good questions today. So, Lance, what would I be in? Lance, again, I'm kind of across the board. I'm looking for stocks that have been depressed. In the financials, Bank of America, Zions Bank, still haven't got back to their 2008 highs. Apple has been depressed. Baidu, ridiculously depressed on better than expected earnings quarter after quarter. There's a huge upside potential in Baidu. I look to be in some of the Visas. I think MasterCard is also one. I would not quite be in American Express because it seems to lag the other two. PayPal, Square, Venmo might be some opportunities for some alternative financial investments. I think Ford is depressed. I could be putting more money to bad there, but I don't think Ford is in near the dire straits fundamentally that General Electric is. GE is in trouble. I'm looking for some pullbacks like NVIDIA. It might be interesting to see how Netflix reports their earnings. I'm not really in retail. I don't know we've had the economy to boost retail, but I think we did have an opportunity to be in some energy sectors here in the near future. So that's some of what I've been looking at. SRPT, do you fool for? I don't Pharma is a news-driven event, so in all honesty, I do the IBB. I do have a doctor that loves the IBB. I don't have individual stocks like this because I just don't know how you use headlines as past performance like you would a chart. So I am in the IBB, which is the closest thing I come to pharmaceutical, pharma, bleh. And that's what I'm looking at in that regard. How much does NVIDIA depend on Bitcoin phenomenon? Not a whole lot. They are a semiconductor and they ran big, but semiconductors have been hit big. So there is some good upside potential. So you do have the ability to have a pretty big run on NVIDIA, but I don't think it follows the Bitcoin phenomenon. It's just been held down again with the China-U.S. relationships and the semiconductors that the sector took a ridiculously hard hit. And probably well justified because people didn't go out and spend a ton on computers unless you're Apple over the holidays. Good questions, both of you. Any other questions I can try to answer? If not, we will see you for the trade findings and adjustments tomorrow night. That'll be at 6 o'clock. I will most likely have Keeve Bybee be covering that as I watch one of my boys that made varsity soccer as a sophomore go and play his first soccer game tomorrow. All right, guys. Hey, I don't see any other questions coming in. I appreciate your time tonight. I do hope this was helpful. Please feel free to email me any feedback that you've heard or seen. I'll do my best to answer that. If for some reason you were not able to get the handout, please email me at khurley@hurleyinvestments.com. I post these on My Hurley Investment, that's singular there, myhurleyinvestment.com if you'd like to get it as a refresher. You guys have a good evening, and I look forward to talking to you next week. Bye-bye.